Hi, I'm Carrie Stacy from Stacy International LLC. I'm a CPA, a CBA, which is a business valuator, and I'm a Canadian CPA as well. What I specialize in is helping dealers sell their businesses. I do business valuations for all purposes in all industries, and I do a little consulting to help dealerships get where they need to go when their results aren't where they wanted them to be. So today we're going to talk about it's time to exit. What's next? So you've come to that point in your career where you've decided it's time to sell for whatever reason, time for a new venture, some other direction or some other place, or whether you're ready to retire or for whatever reason. What's next? This is something that people do typically once in their lifetime. Some people buy and sell lots of businesses, but most sellers I meet, it's their one and only transaction like this in their life. So let's talk about what you were looking for. Cash is king. We keep talking about this in all of our webinars. Simply put, you're selling a stream of cash flow. Just like a stock investment, a rental property, whatever investment it is, you are selling a stream of cash flow. People buy businesses to make money. So you want to make sure, first of all, that your money, your cash flow is as high as it can be over history. Your business isn't being evaluated on 1 year. Your business is being evaluated by buyers and bankers and investors over usually about the last 5 years. So you really want to hit that exit button when your results for the last 5 years are at the peak of your history. When you go to market, what's the most important thing? Price it right from the start. We all know that house down the block that's been for sale for years, even in this premium market. And after a while, buyers start to say, well, what's wrong with that house? What's wrong with that business? Why hasn't it sold if it's so great? Well, if you price it too high, it's going to sit. Now, everybody has a story about the guy who paid a lot for something that wasn't worth that much. And they're out there. It happens. It happens from time to time. But more often than not, businesses that are priced above where they should be just sit and sit and sit for years and years and years on the market. So there's unicorns out there. If you want to wait for one, that's a choice. Be realistic about the shape of your dealership. It's like selling a house. If your cash flow's in good condition, you're going to sell it fast. If you set your price right, if your cash flow's in good condition, if your premises are in good condition, if your business is in good shape, you're going to get more for it than if it's run down, if your results are poor, if you're, if it's a bumpy situation, it's going to get less. No different than a house that's no different than a house that's got lots of deferred maintenance. Let's talk about money losing dealerships. So if you're selling cash flow and there is no cash flow, what are you going to do? What are you selling? You're selling the assets, which is your lifts, your tools, your desks, your computers, your slat wall on your walls, your racks, your merchandisers. Doesn't amount to a lot of money. So you really want to be doing it at the peak of your business, or be very realistic about what you're going to get for your business. I have worked with a dealer who wanted $1.5 million for a dealership that was in a building, and he couldn't pay his rent and hadn't paid rent in the last 6 months. No one's going to finance a money losing business, so it's got to be somebody with cash. Floor plan companies aren't going to approve a new dealer where the premises is losing, where the dealership's been losing money, unless there's a very good excuse for it. But certainly not in this guy's case where his rent was too high. And so you're going to have to find somebody who's worth millions to come and write a check for this. And they're not going to pay $1.5 million for it. So be realistic. If you're in a no income or negative profitability situation, you are facing a challenging situation. So set your price right from the beginning. Here's an example of that. So I've just pulled this off bizbuysell.com, and you'll notice two things. That's the price, that's the cash flow. Every single buyer is sitting on these websites, thumbing through the listings like a boat buyer thumbs through boats on boattrader.com. They're addicts. They're always looking for the most exciting deal, the best deal. That's what they're looking for. And first, they're looking at this cash flow to price multiple, and they're looking for something that's a good deal. Second, they're looking at the location. This one's in Texas. So if it's somebody in Seattle who's looking for a dealership in Seattle, they're going by. That has nothing to do with price. If it's somebody looking for a dealership in Texas and this is right, then they're going to click on it and read your ad. Then you need a well-written ad. But this and this are the top two issues that people are researching. I've listed this for you guys, bizbuysell.com, businessesforsale.com in Canada. These are the biggest, highest volume sites in each country. BizBuySell is pretty big in Canada as well. But bizbuysell.com, I believe, is the largest listing site in the world. So start with that. It's really the only one that matters. If you're in Canada, this one, businessesforsale.com, is pretty good too. Other places, LoopNet and Crexy.com is a new one come to the market that actually is fairly robust source of listing information. So check them out. So if you're going to sell, I'm going to tell you, start by alerting your accountant. Over my career, I've seen multiple situations where the accountant isn't informed till the day the dealer's ready to walk out, the contracts are written, the LOI is negotiated, the deal is done essentially, and then the accountant hears about it. And it could have saved hundreds of thousands of dollars in tax sometimes. So start with your accountant. He'll talk to you about how your affairs are structured in terms of a buy sell. He'll talk to you about what you need to do in terms of minimizing your tax when you sell. It's worth it. Start there. It's going to cost you a couple bucks, but it'll save you thousands, maybe hundreds of thousands. So start with them. Couple of other things I've seen, deferred income. Usually on dealerships, deferred income is customer deposits, and it's a few $1,000s, so it's not a big deal. And that those customer deposits transfer to the buyer. So does the cash behind them transfers to the buyer, because he has to pay for that unit when he delivers it eventually, and he has to provide that unit. Deferred income, I've seen some goofy stuff, and again, talk to your accountant. On the buy side, I've seen people buy businesses without talking to their accountant and inherit large deferred income balances. And deferred income means the cash has been received, but the service or the product has not been provided as yet. So the buyer buys this, and the one I'm talking about had several $100,000 of deferred income. The seller had the cash. The buyer had to provide the service and pay tax on the income as it got taken into income. The poor guy paid 80 grand in tax for income he never got, cash he never got. So your accountant can save you on both sides, the buy and the sell side. In another situation, a partnership dissolution that I was working on not long ago, there was a big deferred income on a small dealership. Well, I mean, a deposit on a dealership on any unit is usually $500 to $1,000. It might be, in these crazy times, you might have a $10,000 to $20,000 balance of customer deposits. This was $475,000 in a small dealership. Just screamed problem. We dug into it a little bit, and sure enough, there was a problem with the mapping in Lightspeed. So, we've yet to figure out and untangle what that error was, but, get the accountants involved to save yourself a lot of agony and risk. Let's talk about asset sale versus legal entity sale. So if you have an LLC for conversation's sake. If you sell the LLC to a buyer, it moves through the floor plan company a little bit easier than if you sell your inventory, your assets, and your goodwill out of the company. But that when you sell your assets out, that's fine. It's clean and easy. When you sell a legal entity, there can be stuff inside the legal entity that you don't want to go. In another scenario, there was well over $1 million of cash in a C Corp. And as soon as I saw that, I said, guys, we can't sell this legal entity even if we wanted to, because what that means is the seller would have to extract that $1.5 million out of that C Corp to sell it without it in it. Well, you take $1.5 million out of a company, you've got to do it as either dividends or payroll. And boy, oh boy, the tax man's going to have his hand out for that, let me tell you. So you got to watch what you're doing. You got to get that accountant involved, especially if you're not super strong in your tax knowledge. And there you go. So, and there's something else called a purchase price allocation. That's when you do get to the deal making point. Say somebody's offering you $1 million for your business. Well, what is that $1 million? Is it 100% goodwill? Is it 50% equipment and 50% goodwill? How is that going to be split up? Because there's tax implications to the different categories. Are your affairs in order? Are your financial statements up to date? I took on a dealer recently, and their statements are months and months behind. The tax returns are somewhere, nobody knows where. You can't sell cash flow if no one can prove it. They're going to need your tax returns. They're going to need your financial statements if you have financial statements as well as tax returns. They're going to need your internal statements. So if you're still doing statements on paper, at least make sure they're clean and ready, that can be photocopied and distributed. Are they clean, and will they stand up to due diligence? Like I was talking about, we found a $475,000 error on these guys' financial statements. That's significant. This was not a large dealership, and that's a lot of money in this dealership. A buyer will walk if it was a buy-sell situation. A buyer wouldn't even go on with that. In other situations, I've seen financial statements that had hundreds of GL accounts, a large dealership with tiny little amounts and millions of little GL accounts. It's almost impossible to do due diligence on something like that. How do you make heads or tails of it? It's just incredible. So you want clean, easy to read financial statements. And I want to talk a quick moment about adjustments. When we go and work, when we do evaluation, and we do evaluation for each listing we normalize your financial statements, which means we take your income statements and we adjust out all of the one-time non-recurring expenses. Like say you just implemented Lightspeed and it cost you 30 grand to get it going. We would add that back, which actually increases your cash flow. If you have a bunch of family cars in the business, lots of people do, we would add back all of the ones that are not necessary to generate that revenue, and so on and so forth. So make sure that those adjustments aren't too many. I mean, everybody's going to have some. Make sure there's not 35 of them. Show them cleanly and clearly if you can on your financial statements, so they're easy for a buyer's accountant to say, oh, okay, I see this item here. I know this is family wages for the teenage son who comes in once a month and he's making 40 grand a year. Make those things very easy for your accountant to identify, or their accountant to identify, and see that the add back is valid so that he agrees with that cash flow we're presenting. And have it all ready to provide to your representative. I've been waiting 3 months for tax returns from one gentleman. I can't take him to market without that information. And then you need to be willing and able to continue providing your financial information to your representative. So each month end has to be done on a timely basis, cleanly and completely, and be ready within a couple of weeks of the month end to give to your representative. Because if you've got a buyer who's excited about your dealership and wanting to move forward, the last thing you want to do is try to keep him interested for 2, 3, 4 weeks while the accountant figures out a year's worth of accounting. It's just not good. So get good representation. Everybody has a friend who's a broker, and there's lots of great brokers out there. But dealerships are different. They really are different. They're complicated. One of the key facts of dealerships is most of them have interdepartmental transactions buried in them. Parts sells to service, parts sells to sales, service sells to sales. These interdepartmental transactions are complex, and in my experience, I don't think I've ever seen that level of complexity in an organization that isn't large and publicly traded. So very few brokers have had experience or understand these organizations. And why do they need to understand that? Because when your buyer starts asking you questions about, why is this like this? Why is that like that? What does this mean? Or the buyer's accountant, your representative has to be able to answer those questions. Dealerships are different. If you have $1 million dealership and $1 million restaurant you're trying to sell, the restaurant, you need, say, $500,000 cash, 300 down, or, maybe you need $300,000, a little bit down and some cash to start paying payroll on day one. With a dealership for $1 million, not only do you have to have that to qualify for SBA financing and have a little cash to make payroll your first Friday, but you also have to have significantly more net worth to qualify for that floor plan company. And if your representative doesn't understand that, you'll go through the whole process and then find your buyer get rejected. And when that happens, boy, oh boy, that's a hard day. It is emotional, it is hard work, it is stressful going through the sale process. It's expensive. You're going to spend money along the way with lawyers and so on, only to get to the end and have the guy turned down by the floor plan company. It's devastating. So make sure your representative understands what the floor plan companies are looking for, and they won't tell you. You just have to have the experience to know. In one scenario, I knew a dealer who had tried to sell and had gone through this agonizing experience, and it fell apart at the end. And lo and behold, the buyer they had been telling me about called me about a different deal I had. So I was able to hear his side of the story too. And he obviously, it was a big dealer. He didn't have the net worth necessary for the floor plan company. So what the floor plan company did was they approved him, but for a much smaller floor plan line that he never would have been able to run the business on. So it's tough, right? That's a heartbreak when you've been at it for 4 or 5 months and then get rejected. DIY. What about doing it yourself? Everybody starts out saying, I'm going to do it myself. So you and lots of people are talented enough to make beautiful PowerPoint presentations and put their stuff together. And some, you generally get the idea by looking around what's what. So then you go out and you put your first ad up, and you get a phone call, and you get a lot of phone calls, you get hours and hours and hours of phone calls, which is maybe not fun when you're trying to run your dealership. And the first one you answer and you say, hi, this is Carrie Stacy. How can I help you? Oh, just calling about that business you have for sale. Oh yeah. Uh-oh. Wait, the light bulb goes on. You realize that now they've got your name. They know where your dealership is. They know what your dealership name is. And who knows, it's probably the parts guy from the dealership down the street calling. So you have no confidentiality whatsoever. And let me tell you, when I sold my first dealership, the closing got dragged out. I had staff quitting. The second one I sold of my own, The staff were sure, and they didn't know till the day the buyer walked in. The confidentiality, we just locked it down. The key sales guy, the best sales guy in the region I had, he was sure that the buyer was going to fire everybody and bring their own people in. Well, buyers are looking for businesses where good people are in place. You know, from time to time, you might hear of a buyer replacing the general manager with his own general manager or something if it's an investment, but not very often. Most of the time, buyers are looking for businesses with skilled staff in place. So people get crazy ideas when they figure out that their place of employment is for sale. So that confidentiality is super important. We'll come back to confidentiality in a second. It's time consuming to market your own business. I probably spend 4 or 5 hours a day, every day on the phone, talking to buyers and sellers. We have access to specialists, and we are specialists. We're evaluators. I can put your data together and show a buyer what your business really is. Whereas if you look at your financial statements, pretty well every good accountant is minimizing that bottom line to just enough to keep their IRS from auditing them, but certainly not what it's actually capable of. So my job as your representative evaluator is to pull out the real results to show a buyer. Because again, remember, buyers are buying that stream of cash flow. I've got great graphics people, and we have other experts that we can draw on to, attorneys, specialists of all different kinds. So, and you really do need that legal and accounting knowledge. So some of you have that, and you should, but you need that package. So let's go back to confidentiality for a second. I want to talk about the industry and what we do different. So most people most brokers in the industry will send out an NDA, a non-disclosure agreement, to prospective buyers. And so they should. Never has an NDA been successfully litigated in America. So they're really just for, to make a point than actually enforceable. Second of all, most organizations then, if you've signed the NDA, they take that at face value that somebody's actually going to keep it quiet, and then they send your stuff to them. Well, what about that parts guy down the street who signs that NDA? He knows now. Do you think he's actually going to keep it under his hat, or is he going to tell your parts guy when they go out dirt biking on the weekend or they go fishing? Yeah, doesn't work. So at Stacey International, we do send out the NDA automatically. We get it back. We actually include a survey questions asking what their cash available to invest is and what their net worth is. They also lie about that because everybody's sure they're worth quite a bit more because the market's gone up, which, that's okay. But we call them. We call every single person before we send out your private information, before we tell them what your name of your business is, before we tell them your location. And I go through the process of buying a dealership, because lots of people think, oh, yeah, it's okay. It's okay. I can borrow that money. It's okay. No, you cannot borrow your way out of net worth with the floor plan companies. So it's really important to have that conversation with these guys to make sure that they are actually able to potentially at least complete and get approved by the floor plan company. And you can usually tell by talking to them. There's lots of good guys. Some actually get mad that I won't give them the information, but if they're not likely to qualify, if they've only got $500,000 to their name, the next question is, do you have any partners with some significant wealth? And if the answer is still no, well, why would I tell them the name of the business? You can't buy it. So, if you do find somebody, and I will be very polite and answer, well, if you do find somebody to partner with on your business acquisition, I'd love to share some more with you if you can find a partner with the liquidity required. So we go a little extra beyond everybody else. And mostly we do that because I've been there. It's really terrible when people start finding out. And B, it's really important for my clients. So having been there makes me understand what it's like to be you. So next, okay, we found a buyer, we're bringing him by. How does your premises look? Your fence all rusty, your parking lot full of potholes? Is your paint peeling? Is there dust everywhere? Just like selling a house, mow the grass, put some flowers out front, get the parking lot repaired, put a coat of paint on. The less deferred maintenance, the better. The higher the price, the faster the sale you're going to get. Finding somebody who wants to take on a project means finding somebody with more liquid cash than they otherwise would need and more enthusiasm for a project, which means a lower selling price. So what about your parts and unit inventory? What do your parts rooms look like? I saw one set of financials from a dealer the other day, small dealer. He had $1 million worth of parts. Well, he only made, it was about 4 times what the dealership should have had. So what are you going to do about that? I mean, anything more than about 2 years old is worthless. And from an owner's point of view, I want to share a little visual that I kept in mind that helped me really make decisions. So if you visualize the parts on your counter as stacks of money, literally stacks of money, those oil filters are little stacks of money. And if that money isn't producing a return, why are you invested in that thing? You're better to sell it off at half price and at least take half the money or a quarter of the money. And even if you put it in a savings account at 1% return, you're doing better than it is sitting on that shelf. And you'll find old timers who say, well, somebody will come in for that part someday. Think of it this way. For every dollar you've got sitting on that shelf, or every $100 sitting on that shelf, you get at least $1 for it every year in the most safe savings account everywhere. So if that $100 worth of parts is going to sit there for 3 years, and you're still going to have to sell it at a discount, what are you doing it for? Get rid of it. You got to count it, dust it, monitor it, make sure it's cataloged and inventoried. It's not worth it. Take as much money as you can get for it and get that money turning for you to make that loss back. Unit inventory. Not right now, I know. Nobody has any inventory to spare, but in general, other times of our life, get rid of that dead unit. Write it down, categorize the write down as advertising if you need to, and get it out of there. You don't want to be on your transition haggling over an old boat sitting out back that's been there for eternity and possibly wreck your deal because this guy doesn't want to take that on and it's a wreck and yada, yada, yada. What about the boneyard? Most everybody has a boneyard. Look out back. You have a motor or two that's half taken apart. I'm sure there's good parts on there. We'll need it someday. There's the boat that's been there for 2 years. Get it taken care of. Clean it up. Take it to the scrap yard. If you have those boats that have never been, or the abandoned boats, do what's necessary. Take the legal steps to get ownership and dispose of it. Whatever you need to do, get it done. In your service department, clean it up. Neat and tidy is the key. Just like a house, neat and tidy. You probably don't have time or money to reconfigure and move your bay doors or anything, but you can pressure wash that floor, get your tools cleaned up, get some shelving from Costco. It's cheap. Pull all that junk up off the floor and get it neatly set up in your shop so that it presents nice, clean, organized, orderly environment. Goes a long way. One thing you will need when you go to market is a list of your assets, fairly detailed, not down to the every single screwdriver or wrench, but you will need a fairly detailed list of assets. So this is a good time to make that up, because when you find that buyer, you're going to have to hand it to them and you want it ready, because when a buyer's hot, you want to keep that excitement up. Okay, this is a big deal, a really big deal. You're at the end of your career, you're tired, or end of this part of your career, you're tired, you want out. When that day comes, some people are really tired and really frazzled, and some people wait till they're sick. It's a tough time, but one of the most important things to preserve that selling price is to make sure your revenue and your net are continuing to at least stay steady. If not, really what you want is continue to drive them up. I met a dealer not long ago, and oh, the poor lady, her husband had died. And so to calm fears, she wanted to sell the dealership right away. But to calm fears, she was running around spending money like water, buying people whatever tool they wanted, giving raises, giving bonuses, helping this, doing that with the money. Well, you know that bottom line is going to tip like this before the dealership's sold, whether the revenue keeps going or not. Remember, what are we selling? Stream of cash flow. If the stream of cash flow is going like this, the buyers don't know whether it's because the dealer, the seller is tired, or in this lady's case, not really sure how to run the business, inherited it. So they will pay much less than if they see continued upward trending results. So keep your foot on the gas, even though it takes every last ounce of your energy, keep trending up. Try not to tip down. And with that said, if you're about to take on any changes in your dealership, like buy a big piece of equipment or give everyone raises or things like that, talk to your representative before you do it, because if you're spending money for big things you think are going to improve the sale, he or she may say, great idea, or they may say, you'll never get a return on that. Same thing with spending money on people and so on. When a buyer takes over, they often want to give little raises to everybody to, sow the seeds of happiness with the new owner. And a business can only tolerate so much payroll expense. So if you're giving them raises and then the new guy comes in and wants to give them raises, that's going to erode the ability of that business to sustain those people. So talk to your representative, maybe hold off making any changes until any deal is complete. It takes time to sell a business. When you decide to sell a business, it's sort of like selling a house, but not really. It just takes longer. You want to sell a house, somebody comes, they look at it, they write an offer, they get some financing, they get an inspection, and 3 weeks later, they own the house. Not the case. So when we go to market, or when you want to go to market, you want to find a representative that you can work with. You sign a representation agreement. And then in the case of Stacey International and many other brokers, we do a business valuation to determine what the probable selling price will be. And in that valuation, we take that step that I was talking about where we normalize your income. And then that schedule of income becomes the foundation for your confidential business review. We get that confidential business review done. We use a proper graphics people to do a very professional product. And I'm proud to say we get many positive feedback, many compliments on our CBRs. Things like, it's the best one we've ever seen. So I'm very happy. My graphics guys are awesome. And then we go to market. You go to market one way or another. Some guys do it one way, some guys do it another way, but you get your business out there to the buying public. And then we find buyers. And if you're priced right, the leads flood in like lots, like phone rings like crazy. For the first week after listing, I will do nothing but field calls for that new listing, because I call everybody and we'll be just humming if it's priced right. Once you've found a buyer that's going to likely get qualified by the floor plan company, you negotiate a letter of intent, which is basically an offer. It's non-binding to start with, usually. And then the buyer does his due diligence and tries to find some financing. So that due diligence might take 30 days, might take 14 days, might take 60 days. So it really depends on the situation and the size of the dealership. Once the due diligence is done, Then we move to the contract stage where you're building a definitive and binding purchase sale agreement. This is where the lawyers get involved and it starts costing you some money. So it goes back and forth between buyer and seller's attorneys 2 or 3 or 4 times. That takes 3 or 4 weeks because attorneys are busy. And once they've hammered out an agreement, it will still have the last subject in it that says subject to manufacturer and floor plan approval. So once the agreement is signed, you have a fully executed purchase sale agreement. Then the buyer applies to the manufacturer, who then, if they approve the buyer, it gets referred to the floor plan company. And that can take 6 to 12 weeks. Once it's all said and done, you pop the champagne and everybody moves on. So depending on your selling price, your cash flow, and your location, it can take anywhere from 6 months to 18 months or more. The average, looking at my databases, the average time to sell a dealership in America is 15 months. So it's a lengthy process, but it's worth it. All right, so to close, get an expert. You need somebody who actually takes your confidentiality seriously. In this industry, your key salesmen, your key service techs, they're irreplaceable. They're what the buyer is buying. So you really want to protect that. And people, the other thing that happens too, if people find out, is suddenly all their time, and we've just talked about 15 months of standing around jibber jabbering about it and not working. Oh my gosh, do you think that guy was a buyer? Oh my gosh, what do you think? Are we all going to get fired? And it goes on and on and on. So keep it confidential. You'll be glad you did. Find somebody who understands your industry, somebody who understands what floor plan companies demand, somebody who understands your business. What makes your business great? Boat dealerships are located all over this country and do all sorts of different variations of the same theme. What makes yours so great? And you need a representative who has a very good understanding of accounting, so that they can talk to buyers, buyers' accountants, buyers' attorneys, address objections that come up like, this isn't right, this is too much, this is too little, blah, blah. You've got to be able to field those objections, and often deals fall apart where somebody doesn't have the answers ready. They need a little bit of legal knowledge because they're going to be writing your LOI. And of course, they need sales and marketing skills. So choose wisely. They're representing you in probably one of the biggest transactions you'll ever encounter in your life. We're here to help. Stacy and Stacy International. I'm an expert. I've been through what you're going through twice. Oh no, 3 times. And I've worked with many other dealers. So I understand the industry. I understand the situation you're in because I've been there, and I have the financial skills, all of it. So happy to answer questions for nothing too. So give me a call anytime. Thank you so much.